Welcome to this edition of One Spaces. This is our last spaces for the year. And we are very privileged to have our partners at Standard Chartered with us today. A robust conversation around growing your wealth for the next hour or so. We'll start with Oma. Maybe you can introduce yourself and say what you do by day at StanChart, and then we can get started.
Good evening to yourself and those who are listening. I am Mo Morero. I take care of wealth solutions for our clients at Standard Chartered Bank. And thanks for inviting me. I'm happy to be here.
So you can tell us a bit about Standard Chartered and StanChart. What is it as an institution? And what do you specialize in terms of market segmentation? And you focus on the affluent within our market segmentation. So you can tell us a bit about StanChart, a little bit about the history, the Kenyan setup, and how all that works out to the market segment that you work with.
So from a StanChart perspective, we've been in Kenya this year, 114th year since we did set base in 1914, supporting our clients really find opportunities not only within the country, but across borders, and also from an individual perspective, supporting our clients grow and pass the wealth that they have grown. So from a segment perspective, we do have global clients. These are international institutions that are looking for opportunity within the country. They are supported within what we call CIB, which is the corporate and institutional banking. Then we got also the individual clients and our small and medium enterprise clients who are supported within the wealth and retail banking. This is where we do have the small and medium enterprises and those who call the affluent clients are do supported within the wealth and retail banking. And that is where I see it. That's where I do support clients.
And then when you think about an affluent individual today, how does that work out in terms of income and net worth beyond those two concepts? Who is an affluent individual for you?
An affluent client is an individual who is looking for solutions beyond just basic banking. It's not necessarily an individual looking at it from a fixed amount. We're looking at it from client financial journey. So it could be an entry-level professional who is starting to plan for their future and looking for how can I be able to plan for my family and ultimately retirement. Those are the ones that we do call emerging affluent clients. Or a mid-career individual who is starting to think, where will my kid go to school? What level of education or kind of education would I like them to have? Can I start thinking about my retirement? What does that look like? Or you're a global citizen who, let's say you're Indian or Chinese, working out of Kenya and looking for an institution that can be able to support you, not only locally, but globally. Maybe you're an entrepreneur who is looking for opportunities beyond just our borders, or you're a sophisticated investor who is looking for more than what we can be able to offer within Kenya. So that's the affluent client. It's within financial spectrum from somebody who is starting up to that person who is at that stage of their career who's saying, I've worked so hard over these years. Now I need to start transferring the wealth that I have made over the years. So that's what we call affluent clients. It's within a continuum, not necessarily from a kind of amount of money that somebody has.
Now, Kush,
yes,
I should say one of our regular hosts, Ramanyang, remembers you as the earliest relationship manager he ever had. That's a positive note. You have a solid backing from him. Maybe you can tell us a bit about yourself and what you do at StanChart. And maybe don't reveal how long you've been, because some people are trying to get age and all.
I get that question a lot. So when did you start? When did you get out of uni? But that's 20 years ago. Let's just put it like that. So I will just share that bit of knowledge. So thank you for that. Just a bit my background. I've been in banking, like I mentioned, over 20 years, and I worked in investments all my life. And I've been very passionate about changing lives in terms of wealth creation. And we go through journeys with clients. We understand what they're doing. And part of my role as a head of investment advisory and managed investments is not only giving you the solutions to find a way of growing, it's understanding your goal. So you'll hear through our conversations, and I get that asked about, what's a return? What's a return? I will tell you that in the end, but first let's understand you. So my journey is all about, if you come in, we connect, we get a cup of coffee and sit down and have a conversation. So that's where I am.
Could you maybe explain a little bit now in terms of the affluent clients? I think Oma put it in context that it's not about the wealth or the network. It's also about what's your goal in life. Now, could you reiterate that to maybe someone who's just come in to listen in?
I think just to add to what Aurora said, the context of really an affluent client, it's aspirational, is where we want to be, and it's beyond your banking need. We come in, we do our transactions, and then life happens. But what we're seeing is this trend of the affluent client, why we define it that way, is because you're looking beyond your traditional. You're saying, listen, I need to do more than I'm doing to make sure that I have a way of celebrating my life by achieving what I want to achieve, what I'm passionate about. To think about our parents or grandparents, but was very much working, building their assets, but they looked at enjoying it a bit later in life. What we're seeing is it wants to come here. We are, like you mentioned, global citizens. You're not living in one country anymore. You're looking at being a nomad, a digital nomad, as we talk about it. How do we help you, affluent client, as that definition would put together, is to build your wealth in a more systematic way and grow you beyond your traditional banking needs globally, not just locally.
Then, Aurero, you could tell us a bit about the concept of now is your time for wealth. To put a bit in context, this weekend, one of our favorite wrestlers is called John Cena. He retired, and his favorite phrase is, "My time is now." So that relates very well to what you're talking about, the message that StanChart has been communicating in terms of now is your time for wealth. So why should people not wait to tomorrow? Today is the concept that you're trying to drive home. So could you tell us a bit more about that?
The message now is your time for wealth does deliver a compelling message to our clients. What we're trying to say is that the cost of waiting to invest later, because we know some of these decisions, it's so easy to say I'll start tomorrow or the day after, or when I've reached this kind of money. We're saying the cost of waiting could mean you're falling behind on your wealth ambitions and some of the goals that we have in life. Our goals never wait for us. And to really look at this messaging deep, it goes beyond just the message itself. It's more or less reiterate who we are. An international bank present in some of our markets for over 170 years, strong global network that really do connect our affluent clients with personal wealth opportunities across the board. And if you look at our setup, we do have a presence in 4 international hubs. That's with Hong Kong, Singapore, UAE, and Jersey. And this global network and mixed with really good on-ground insights. We've been in Kenya for over 110 years. We've been doing well in Kenya for over 20 years. This does offer our clients the opportunity that we understand you in the market, but we do have that global presence to be able to get the opportunities that are available globally for you. But also we do reiterate our wealth expertise across our network, that we got advisors across the board that do get market opportunity. We're able to distill this through our chief investment office and through Kush and our team, be able to share with our clients locally. Now, part of this messaging, what we're also telling clients that over the next 5 years, starting this year, we're investing about $1.5 billion globally to really strengthen how we deliver on these solutions and expertise to our clients. So that's the message that we're passing to our clients, that the cost of waiting means falling behind on your life goals and ambition. It's the right time to invest. As the adage goes, the best time to have planted a tree was 20 years ago. The next best time is now. That's the messaging that we're passing on to our affluent clients.
So, Kush, when someone comes to you and they want to start now, I know one of the biggest hindrances people have is in terms of, I don't have enough to save to think about the future or the now. What would you tell that person so that they'll be able to maybe change a bit of that mindset to you can start now?
That's a brilliant question. And I think we always go back to the sort of basics. Your wealth has a purpose. Why are you saving for what you're saving? So first of all, we follow a certain framework to understand your goals. And those goals are broken down in 3 ways. When you're starting to invest, first thing is to bucket your goals. So one is your today. We call it the today, tomorrow, and the forever framework. Essentially, it's to say, what are your today's needs? It's meeting your near-term spending needs, emergencies. You have to make sure you've got insurance as well for day-to-day as you're moving around. And examples are like rent, school fees, medical checkups. So what is your goal for today? What do we build for you for that today? That could be between 1 year to all the way to 3 years. And that comes into solutions which are quick and easy to come in, get out, like your money markets. We have an SE Shilingi fund that we have. The minimum to invest is 500 shillings. And it's a very disciplined way to make sure that you're building your pot as well. We also have foreign currency dollar funds as well to help you with that. And then the second one is tomorrow. This is quite important because if you remember, 5 years ago, we had COVID. And I was, oh my God, when is this thing going away? It's 5 years on. We're still like, wow, time has flown and AI has taken over our world. So time is flying so hard. How do you accumulate your wealth? So you're not saying you're going to start high. You start slowly in a very disciplined. So we have it in a framework that helps you bucket those. So those are your 3 to 5 year plans. And you look at positioning yourself in some of investments that can give you returns above inflation or our cost of living. Or it could be a buying a family home, a rental property, or even having a nice holiday saved up for investment property as well. So there's an education. I think that's the biggest one in many of our worries who are parents is this children right now are, again, very global because of the information being said. They may want to go to another countries. How do you save for that? And the forever is your legacy. So what happens? Say you say, look, retirement is always like 55 generally, but you say, I want to leave at 50. So how do you plan for that? That's a goal. So for us is when you're starting is first, let's get your goals in a bucket so we understand. And then we help you build your portfolio accordingly so that you're not moving from one to the other. This was done for a specific purpose. So the start is please spend time with us. You can either come to the branches or send us an email on wealth.kenya@se.com if you want to connect and just have a conversation with our team. We have really good teams. Our relationship managers are certified by CISI, Chartered Institute of Securities Investment. It's a global certification so that when they're talking to you, they're coming in with a lot of content and a lot of factual information that's backed by research. They're supported by investment advisors and insurance specialists and treasury specialists. So you have a whole team behind you when you're making that call. So the objective really is please start thinking about this. Come to us and talk to us so that we can help you set your financial goals.
Coming over to you and maybe doubling down on the same question, like why should someone think about tomorrow in terms of starting now? Why should I start now to save for tomorrow?
One of the things that we know that most of our life goals would not go away. And if you don't plan for them, they will happen because life does happen. And one of the things that we do tell our clients when we have a conversation is that, look, you just got married, you got a baby. That child will need to go to school. At some point in time, if you're employed or even if you're an entrepreneur, you will get to retire. It's how do you note down these goals that you have? And that's why the piece of having a conversation with us is really important. Having a conversation with someone who will listen to you more or less like a financial therapist that help you crystallize these goals. Once you note them down, then the solutioning piece become more or less an outcome because you are so clear on the goals that you're solving for. At whatever stage of your journey is, if your kids need to go to school, do you have, let's say, an investment in place that will finance that? Do you need an education policy to take care of that? If you're looking to retire, your current pension plan be able to supplement. We know most pension plans do not. You need to start putting investment aside that would be able to generate for you income when that particular time comes. Then you more or less say, I'm starting it now. It will take care of me 10 years down the line. Then the solutions that you put around it do wrap around your goal. That's why when we're speaking, as Kush did say, we look at your tomorrow, which is basically your needs for now. The tomorrow takes care of your goals, your dreams, your aspirations that you have as an individual and also for your family. It's critical that you really do have a proper look into that, note them down, then you get to have solutions around them.
Kush, coming back to you now. So in terms of relating today and tomorrow, and also like just day-to-day financial needs to long-term goals, how do you help someone who comes to you and they're thinking about a long-term goal of, say, saving for retirement, but their today financial needs are not able to help them meet that? How do you work with someone so that they're able to have a way in which they can integrate those two in a good financial plan that they can stick with?
I think in terms of financial planning, so the first step is, of course, jotting down what are the today needs, what are the most non-negotiables we need to take care of, and putting a number to it so that we understand what the target is for its school fees. Maybe annually you have to pay 1 million shillings, for example, a year. How do we work backwards from your salary or your business income or rental to build that and it's taken care of? So when you look at that, one thing is we have to make sure it's a disciplined way of and a way of investing. It's one of the things we focus on because when you start small, you'll be quite nice to make sure that it hits the targets that you had put into place. So it's happening in a more systematic way and it's on autopilot. So it builds your today needs. And then when we look at the tomorrow, we also look at, okay, so where are your investments right now? You might have bought a plot here or across Kenya. You've got some rental income coming. You have maybe 2 businesses. So let's align it and say, okay, in terms of your goals, what you have, let's do a stock take and see where it is. Is it giving you returns above inflation, your cost of living? And how can we help you diversify? The most important thing is you're not relying on one source of income. How do we build multiple cash flows for you, whether it's in shilling, dollar, euro? It's a great way to make sure you build passive income into your tomorrow. And the best way you can do it is diversification. So that'll be the second element as part of the conversation. And then the third one is your risk and return to look at, okay, what is your risk appetite? I know that there's a lot of conversation on return, but at the end of the day, if you don't have the risk appetite, then really nothing we do works for you. So the first thing is once we understand your goals, understand how you need to diversify, is understand your risk appetite. So the questionnaire that we do is called Customer Investment Profile. You'll sit with your relationship manager and you'll go through it to understand your rating. It goes from 1, which is risk averse, all the way to 6. And then we'll understand what sort of portfolio should we build within that risk appetite. And then the last 2 that we really focus on is making sure you stay invested. Your tomorrow and forever doesn't happen overnight. There's nothing that you can make money overnight. If you have anything, please do post on the chat. I love to know where I can make money overnight. But time in the market is so important because markets move. We're seeing this trend whereby tariffs came in last year, market fell 20%. Where are we now? We're at all-time highs. So if you stayed invested and you spend time in the market, you'll actually really perform well rather than timing the market. And the last thing is, have you protected your assets? So those are the few steps we take as part of your today, tomorrow, forever to support you in that conversation. And you continue building in a more structured way, and then it goes into autopilot so you can do the things you want to do as you build a portfolio.
I like that bit about the autopilot because I think most people don't have the time to actually monitor these things every day. So if you put it on autopilot, then that means that the money is taken out from your bank account, maybe from your salary, and flows directly towards investments. So the autopilot bit is very important. Did you agree?
Yeah, because that's the right way to do it. Well, say, for example, we were just talking to a client the other day. The client just started at $500 a month. They just put it away. And automatically, they have built up their portfolio in 2 years' time. They're like, oh my God, I have funds now. So that's the best way because you're doing what you're doing to build the income. Don't focus on, where is this market? My friends are going here. I need to invest here. No, we're all over the place. Let it be on autopilot so you can actually continue building your wealth where you can keep pumping into the portfolio to build that and compound it.
Moving over to your real one question is financial planning. I tend to think of it as very personalized to your particular client circumstances, risk profiles, and life objectives. I know 2 people have the same risk profiles, life objectives, and though you may think of them as having very similar ones. Personally, I tend to be very risk averse. How does that play around in terms of making a really personal financial planning to someone so that they fit their profile? They don't need to be worried about markets as much.
I think what really does drive what you do as an individual when you're thinking about your financial planning is it starts with your goal. The goal will help you really look back and say who you are from a financial perspective. Who am I? And that's the piece that we start with, knowing yourself. And we do use what we call the custom investment profiling that helps you understand who you are. When you understand who you are, and when coming to Standard Chartered Bank, the primary support structure that you have is our relationship managers. And I think as we indicated earlier, they're trained and supported by professionals on the background. And the conversation with the relationship manager does help you put everything in perspective. Because for example, on this call, your needs and my needs are different. My family and life goals are different from your family and life goal. And that's different also from a Kush perspective. That conversation, understanding who I am as an individual, what are my goals, and how does my current situation align so that I can be able to put the plans in place for my goals. That putting together everything in what we call the client investment profiling, that help you plan. That is really critical because when it comes to investment, a lot of emotions do get involved. And putting that plan in place, documenting it, really takes out some of the emotions that comes to investment. Markets will sometimes become a little bit choppy. You get emotive. You want to come out when you see a downturn, or because there's a particular rally on a particular investment, you want to do more. That conversation helps ground you and stakes your investment on a given journey that really meets your goals. So when it comes to financial planning, have a conversation with a professional. It's just as I said, when you're sick, you don't really diagnose yourself. You Google, they say, okay, these are my symptoms. I know what is ailing me. Go buy the drugs. You speak to a doctor. It's the same way. Speak to a professional, will understand you, help you put everything in perspective so that when you start implementing, which is the final stage, which comes to the products and the solution, they speak to your goal, because things do change. Nothing gets started. Periodically, every 6 months, you get to check, are we still meeting our goals? What is it that has happened in the marketplace? Is there something that we need to adjust? At that stage, then you get to make adjustments that really still speak to your goals, but taking advantage of the opportunities that market does present at that moment in time.
Kush, maybe one thing that people fear is, I bought a stock the other day, it went up 100%. Cool. I don't need financial advice in that context. Why is it important to think more than just like a single stock, or just to put it in context, more of a portfolio that I have that is well aligned to my life circumstances? Why is that important? And why is it important to speak to a financial advisor when I can also just do it myself?
Eric, great question. I do get that sometimes. And they're like, well, I've got a portfolio. I don't need to do anything else. We live in a cycle whereby things are changing. And I think as more and more information is out there, and as Aurora mentioned, you Google everything. AI is, what ChatGPT, why should I come to you? Which is fine. That's okay if that works for you. But the view is that, like I mentioned, we stick to this autopilot because you don't have this as your day job to keep trading, right? Remember, when trading or execution of a single stock is on the back of two things. One is obviously the corporate fundamentals, and then you have the sentiments that come in the market. You have no control over. So what you should be thinking about is, yes, I should have a portfolio of really good quality, for example, stocks, but you have to create an all-weather portfolio. What does that mean? So when you sit down and say, look, I can see inflation's going high. For those of us who have gone through that in 2022, we saw the rise of inflation. Our cost of living went up the roof. You saw some assets move whereby the stock market actually fell over 30%. So if you had invested beforehand, you will see your valuation drop. And if that's the only thing you had, nobody knows the future unless you know anybody who can tell the future is what's going to happen. But if you had a portfolio that focuses on rising inflation and falling growth, or growth rising and inflation falling as a combination, you build a basket of different solutions, which is stocks or commodities. For example, gold has done well. 2019 was right around 1,000. Today it's 4,000. Who would have thought that's going to happen? But if you had it in your portfolio, it's a great way. Now, to help you not think about how much of it, where should I put it, we've already built these portfolios for you. So we have something that called Signature CIO Fund. It is essentially to the autopilot I talked about. If you're a growth investor, you say, look, I just want capital returns for the next 5 years. This portfolio actually does that. It actually looks at all the environments and creates funds of funds, which are made of ETF trackers and made of following tracking gold. It's made of various types of asset class, and it's rebalanced by us every month so that we take advantage of opportunities. You'll see, oh, Japan's doing well. I want to buy a stock, but you have no idea where to start. That's our job. So if you say I'm a growth investor, there's a ready portfolio for you to build that. If you're an investor who's an income investor who says, look, I just want income for my tomorrow, I want my passive income, we have a ready portfolio for that as well. We also have a balanced portfolio. You say, look, I'm not so aggressive. I just want a 50% in stock, 50% in bond. We have a balanced fund that gives you really good returns. So just to give you context, the CIO growth has delivered 12% plus in 2024. This year already, we were at 16%. You can just see it closing higher in dollar terms. Balanced funds around 11 to 13%. You've got the income fund that pays you around 6% on dollar. We also have other funds that track this S&P 500. They pay 12% on income. So there are a lot of portfolios. And if you're saying, look, I don't want to risk, you just mentioned, I don't want this risk. I want to be conservative. At least we give you a 5.2% on dollar paid to you on a monthly basis. So we have it for everybody, every risk appetite. And this is the autopilot I talk about. It's an all-weather. So you don't have to worry about what Trump decides tomorrow morning when the war happens elsewhere. You just have to make sure you build a resilient portfolio, and it's built on the today, tomorrow framework. So you're not chopping and changing, and it's growing systematically over the next few years as you had planned.
And one more question you also always get is, what stock should I buy like today to get rich How is that different from thinking from a portfolio perspective also? I just reiterate this previous question I just asked you.
I'll give you an example. We started with AI 2016. That was just a theme then. And look at where we are now. So there's no single stock. It's you're buying into sort of sectors we love. Of course, technology is taking over our lives. We've just published our outlook as well. So if some of you are our clients, would have seen it come through. And defensive stocks like healthcare. So there's no single stock. Why do you buy a portfolio? Because if one goes down, the other one balances off. So I would say single stocks have a place, and we know the S&P 500 is a good quality basket. There's some good names across the board. So the objective really is, what is this portfolio supposed to do? If you're trading it, that's a different execution. That's not wealth planning. That's just trading. But a portfolio is building asset classes over a long-term period, and you're taking advantage whenever it is. So sectors are important. Macro environments are important. Even if you buy a stock, what is the stock doing? What is the environment it's trading in? So I think there's no single stock, but there are sectors that can really support as part of your total exposure.
And then I get a lot of free advice on Twitter. Why do I need to have a plan myself? There's a lot of free financial advice. It's not customized to me. It's out there. How do you respond to that for a client?
If it works for you, do it. But if you want to speak to somebody to just get your bounce of ideas, we're here. So we complement it by trying to get as much research. And remember, at the end of the day, when you're talking to an institution like, say, for example, Standard Chartered, who's been over 100 years in this industry, they have a whole independent way of getting your research. So Google is your best friend. ChatGPT is now your best friend. But do you know if it's factual? Do you know if it's verified? Do you know if it's research? Someone would have just put notes in and you found it. The idea is that if there's something that you want to build, to think about, okay, how do I start? Where do I start? How do I automate it? Then do speak to us so we give you those ideas. In fact, our insights are quite free. If you go on our website, we have market insights before it opened to all, market views on the go. We publish papers. So if you're a reader, you want to understand the markets, we have free research for you. We do a lot of videos. So if you're somebody who likes to learn through YouTube or X, we do have channels like our SC Money Insights. We like podcasts, SC Wealth Insights as well. So everything is open for you. So we have a hybrid for those who want to speak to somebody or those who want to follow videos as well. So both are available. And then we're here to support you in whichever way you want to go.
I should say I receive a lot of your insights on email. So I deeply appreciate the kind of content that you put out. I'm a good reader of that kind of content. I'm back to Aurelio. I wanted to understand a little bit about estate planning. People die and then they just want to do a bit of intergenerational wealth transfer. And that's a big challenge, especially when, let's say, you own a piece of property and you want to pass it on. It's not African so far, I think, to plan for that future in which you're not there anymore. Why is it important for someone to think about that? And how is it important is estate planning generally in the context of just intergenerational wealth transfer, family governance, and preserving value across generations?
And it's true, as you say, it's not an easy conversation to have at a family over dinner table. It's a tough one in most cases to have. But ultimately, it's an important conversation to do have. Just to give you a little bit of perspective, globally, in the next 20 to 25 years, research does show that over $125 trillion will be transferred from one generation to another. And that's basically the baby boomers transferring wealth to the millennials and Gen Zs at the moment. And if you bring it home from a Kenya context, it will be the independence generation that are now transitioning at the moment, transferring that wealth to the millennials, to the next generation. It's an important conversation to have. And why do we say so? As still research also does tell us that 70% of the wealth that get lost by the second generation, and by third, 90% of the wealth that have been made has been lost. And this kind of information that makes it really critical, that you work so hard to make all this money, then it gets lost. Now, one of the reasons that it does get lost is, in most cases, and I think in this country we know, family conflicts in most cases does play a role in some of these loss of wealth. And it's important when you do estate planning, you get to mitigate some of the family conflicts. Now, and also in most of the cases when you plan your estate properly, it does bypass the probate process where you go through the courts to get the assets that you have worked on to be given to your ultimate beneficiaries. And it also does help as an individual to align your legacy planning needs to the family values. So in most of the conversation that we're having with clients at the moment, they say, Whereas it's a difficult conversation, but it's a necessary one to have. And what we are also seeing a lot of is not just necessary that you pass it in an orderly manner, but also helping those who are getting the wealth not to see it as a windfall, but be able to pass it to the next generation so that the decisions that are being made during that process does not look at the generation that is really receiving the wealth, but thinking about 2 or 3 generations down the line so that the wealth does get to transfer from one family to another. In this country, at this very moment, as we see the independence generation transition at the transition, it's really critical for individuals to really have a conversation. And at StanChart, we have partnered with professionals, be it lawyers, accountants, that help you be able to really put everything together in context so that it can help with the conversation, can help with the whole process to really put your estate in order so that when that time comes that it now needs to move from one generation to another, it speaks to the values that you have and that you want to pass to the next generation. So it's a really critical conversation to really have, however tough it is.
So I wanted to perhaps put a question to you, Kush, especially on wealth preservation versus wealth creation. Why are those two important? Why is it that wealth preservation is also just as important as wealth creation also? And how do you help your clients protect their wealth against market volatility, stuff like inflation, economic downtime, to prepare for the worst in that sense so that they don't lose what they have?
A great question. Thank you for that. I think the first step is like one of the things that we do work on is creating, growing, and protecting. That's the sort of the path we take. So as you're creating, again, going back to the question that make sure they're aligned to your goals and we start building the portfolio. Now, within that time, you'll see markets moving. You'll see a lot of volatility. That's the nature of just open architecture that we work with. So we work with international fund managers across the globe, and it's not a biased investment that only is Standard Chartered, for example. So when you're creating that wealth, you're working with global fund managers that will help you look at avenues to access investments. We have over 200 funds that are available. And if you or somebody wants to do their research, you can do it online. But part of the risk return tells us the type of portfolio to build. Now, if you see that as part of wealth creation, somebody's showing a graph that goes up straight, in reality, that is not the case. So your risk return will determine the type of portfolio we build. And then, of course, the type of investment you are. If you do, say, for example, technology, those are like high volatile stocks and they can go up or down. But the idea is you're not doing it for just today. You're doing it for your tomorrow and the forever. So that wealth creation starts with buying good quality assets. And the objective really is that when there is market downturn or volatility, it's part of the cycle where you're saying, listen, I want to average into my portfolio. So when you do a systematic plan like a wealth builder, where you can do it on a monthly basis, you're not timing the market. So say in month one, you've started, you've invested the next, and you bought it at say $10. The next month it's down at 8. You bought the same, you put the same amount, but now you bought more units. On the long term, it's called a dollar cost averaging, so that you average out your cost into the portfolio. It's a great way for wealth creation. Again, I mentioned autopilot, and it avoids this issue about, oh, my valuation is down. Yes, it can be, but we actually have a list of clients who are actually having shopping baskets whenever that happens. So depending on your risk appetite, we then build that wealth creation. Now, wealth preservation is part of the same conversation. So you are building your assets, you're buying your houses, you're building this portfolio. And one of the things we've done as part of our team is to work with subject matter experts. So a team of lawyers who really can give you that advice. We've partnered with them to be able to give you ideas on how do you do wealth preservation in terms of wills, trust, or even estate planning. So it's all about a very great way to make sure you have that. We call it the family office, whereby you have your banker to tell you, okay, this is my creation. In terms of protection, we have our insurance area where we say, okay, have you got insurance for yourself? Because if you're working hard and something happens to you, what about your kids? Have you protected them? So there's a whole team of specialists that can support you in that journey. And then you've got a team of lawyers who can help you big book or your wills and your trust, depending on the country of your investments or wherever you reside in. So it's a whole continuum. And the idea is we just need some time with you to really sit down with your relationship manager and at least be open with us. And as Aurora mentioned, we are the financial therapists or doctors, whatever you want to call it, because we want you to be vulnerable with us so we can help you build that. And that's where the objectives come in.
Well, why is it important to think about risk even as you seek to maximize returns?
I think in one of the earlier conversations, you did say that, I bought a stock, it's gone up 20, 30%. I'm okay. Fundamentally, when it comes to investment, it's really critical to really know, why am I investing? Then the solution does start to come into play. Because every return that you get, there's a risk reward element into it. And the fact that, let's say, I invest, let's say, in gold stock that has been up X%, does not necessarily mean, for example, let's say yourself, who is placing money that you want to take your kids to school in the next 2 years, you should be able to put your money in the same kind of investment, because you have different needs, you have different investment horizon. If that particular portfolio comes off 10, 15, 20%, then the goal that you want that money to do for you will not be achieved. And you've seen it even the behavior of even our local stock. It does tell you that as you go for any investment, you got to always match your risk and return. It's not always just you chase the return element, but it's to understand the level of risk that I'm taking. Is this something that I can be able to accommodate and I can be able to absorb? And also it does match the investment horizon, meaning if this portfolio were to dip, let's say 10 or 15, 20%, how long do I have to recover? Do I have a longer time? If I have a shorter time, then the investment that I put in place should be able to match it, so that I do not just chase the return, but I make sure that I match my risk to the return in such a way that I will not be able to compromise on the goals that I did put in place to start with.
And that's very good. In terms of context, risk is very important to think about just as much as return. So I have two questions and then we switch to the audience questions. So one, I wanted to ask, in terms of products, there's so much information out there, Akush. People don't know where to start sometimes. And so how do you help people come to you to be able to at least optimize their decision making and avoid just that bit of being overwhelmed by information and options? Because just alone at the NSE, you have almost 50 plus stocks to invest in. If you add that to the other asset classes, bonds and all, so you have so much information you should keep track of. How do you help someone to be able to get started and at the same time not to be overwhelmed by these products?
Eric, I think product, like you said, there's so much out there. And for you is to understand when you're choosing to invest somewhere is looking where you're going to park your funds, how long have they been doing it? And we call it survivorship bias. What that means is that looking at the solution, they're giving excellent return, way above, say, government returns. If you're looking at low risk. And if you're looking at stock portfolios, you're doing really well. But the way to assess a fund manager or an investment manager is to know the last 10 years, how have they performed against severe risk or stress? So the likes of global financial crisis, the likes of COVID, for example, and then the most recent, the inflation side. The idea is how have they performed? Because there is nobody, only 20% actually of the global fund managers have outperformed the market. So it's very rare to get consistency there. So when you're looking at what is my selection, before you even get to that, again, we keep going to the basics to understand what is it that you want to do? What is your risk appetite? So we start that conversation. And then for those of you who want to read, of course, there is a lot of information out there, but the idea is we will help you now tailor that solution. So for example, you say, look, I want $1,000 a month. That's my goal. I want to build that portfolio. So based on your risk appetite, the relationship manager will sit down and work on a portfolio to generate that cash flow for you, for example. So that's a goal. Now, that will be a basket of solutions. It won't be just a single investment because the objective really is that you're diversified. And that's where we will start. If it's saying short term, like today, so our Shillingi fund, which is 500 shillings, you can just park your funds in a money market and be able to access it for 6 months if you want access to it. If you're somebody who says, look, I want to be aggressive on capital, I want access to commodities or natural resources because that's my risk appetite, we have that. We've had north of 80% of returns on gold, but it has also fallen. It's all relative to risk reward. And that's where we would say we would start the conversation is to understand your journey.
So final question for me before I switch to audience questions, Aurelio. There is the question of why should I trust a financial advisor? Why should I put my future in terms of wealth creation and all in the hands of a financial advisor? What did you tell that particular client?
That's a really good question, because when it comes to issues not only of money and investment and on a solution that you're looking at for long term, trust is critical. Trust is very important. And I think when you look at our history, having been in most of our markets for a period of time, that is something that we have built in a number of our markets. Otherwise, we would not be in this market for over 100 years that we have been in Kenya. Now, what is it that we have done to just make sure that we have built that trust? One, the training that we offer to our relationship managers. Coach did mention that are certified by the Chartered Institute of Securities and Investment of the UK, but also the support structure we give them: investment advisors, treasury specialists, and insurance specialists that help make sure that the information that they give you is from a point of authority. But also one thing that we have done, and we mentioned it earlier, is that when it comes to investment, we do have what we call open architecture. This means that we partner from an investment perspective with global fund managers. So we got Allianz, JP Morgan, name it. And locally we got Sanlam. That way, they are good in what they do. And then we be able to look at what is it that is available in the market that would meet our client needs, depending on the goals that our clients have, from it be it today needs, the short-term needs of that covers your today, or tomorrow that looks at your goals, or from a forever, a wealth transfer perspective. That's really important because we don't get to really push a particular product on our client's face. The solutions you get is what meets your goal. And if it's a situation where that particular solution no longer meets your goal, then we can't be able to easily switch you to something else. That is really critical for us. And that has helped us develop trust across the years that we've done investment. If you look at, for example, in Kenya, in the last filing, clients have trusted us with over 290 billion shillings of investment. That comes from a point of trust. And for us, it's really critical. That's why we have to make sure that our team are trained. They get market information that we'll be able to collect globally and share with our clients in Kenya that whatever happens, what does that mean for you? Does it mean for your portfolio? What decisions would be good for you to take? That is critical, and that's how we've been able to develop trust with our client, and we continue to really just make sure that the solutions that we give you, the advice that we give you comes from a point of authority, but also we are open enough to work with a lot of people that help you as our client meet your investment and growth goals.
I think a question that ties into this straight from the audience is this one from Kijana Maridadi. He's saying, do you face a situation where someone does not trust your relationship manager or advisor, and how do you navigate this? Maybe you can start with Kush.
No, thanks. And I think, look, trust is the main part of this conversation, and that's how you build a relationship with the client as well. So first thing is, when the RM is speaking to you, they've come in with a lot of back-end checks. One is the certified. Secondly, the information they're giving you is not researched by them. It's actually researched by a team who are independent, our CIO office, as Aurora mentioned, and their job is every day to look at opportunities for our clients. That's their job. They look in and say, US, what's going on? Where are we seeing direction? And they write papers for it so that for us, we use that information to be able to understand how do we match that information to the risk profile. And then the solution is not like you have to buy one fund. You'll have an array of 5-6 funds in your portfolio. So the relationship manager, we actually have our fund select list. These actually are done, again, independently by a team that's a product team that actually evaluates funds. So what are our checks? One is how it's performed over the last, say, 10 years. Does it hold over $100 million worth of assets under management? How is the fund manager's performance versus peers? There's a lot of check before it lands on your lap in terms of the mobile app. So again, all this research is done before the RM even meets you to know, okay, this is the solution. The third thing also is portfolio reviews. Now, one of the areas is, of course, looking at creating the portfolio. Then you have a team of advisors who are independent of the relationship managers. Their job is to really look at you, understand you, and partner with you in your journey in terms of portfolio building. So the RM may have had the engagement, but there's another person who also checks your portfolios on the back end to make sure if there's an opportunity to exit, we will exit, or to add depending on where it is. Now, every day 13 minutes. The time you have the relationship manager enter the office, they're given the lowdown on what has happened overnight. So every day they're empowered with information about where we see opportunities, what's going on, what are we expecting in terms of the market cycles, why is the reaction what it is, so that when they speak to you, they have information. It's also something that we would take as feedback if it's not working, if there's anything changes to be made. But when you are meeting your RM, they have come in with all this equipment from local office, from the global office, so that they are giving you unbiased information. And that's what we try and do to make sure we deliver on that.
Did you have something to add? I think you'd spoken a bit about the trust aspect before. Would be interesting to see your perspective on that.
I think my colleague has covered it. From a decisioning perspective, your relationship manager is really well equipped. Unless it's an interpersonal issue that we can be able to look at. But from a professional perspective, the training and the support structure, be it from market information and the team that support them, gives you really information that would speak to the goals and the dreams that you have, that you put in you as part of your financial planning.
Could you also give a bit of context to the fact that you have 100+ years of history of doing this? So how does that play in when a client walks into seeking information or at least guidance from you? How does the standardized process work across to be able to identify client needs, give them some propositions, and then discuss them on what's optimal for them?
The first step in all our conversation, when you come in as a client and you want to start your wealth journey, we sit down with you and want to really understand what exactly is your goals and dreams. It goes through a process that a client can personally do through a mobile app, which we call the client investment profiling, that helps you understand who you are as a person from a financial perspective. That comes out as more or less in a skilled way. One, meaning you are so conservative, the only thing that you can probably do are bank deposits, and that's the only solution you will have. Or you got the experience, you got the knowledge, you got the understanding and the appetite to be able to invest in a little bit more, be it you want to be investing in equities or bonds. Now, that scaling helps us be able to narrow what are some of the solutions that, based on your risk appetite and risk tolerance levels, we can be able to show you. That narrows everything down. Now, once you go that perspective, then now you say, what is it that you want to do from time perspective, investment horizon? Is it the protection or growth that you are looking for? Then the solutioning piece now comes in. So this is not something that happens on one day. This is not something that you walk in and you walk out, unless you had done this prior and you're very specific on the solution that you need. We take our time to really understand you so that when you make that decision to invest, it comes from a point that it really does match your goal. As I said, it starts from understanding yourself from a risk perspective. Then the solutioning does come in. The solutioning comes in from, are you investing for today, tomorrow, or are you investing forever? The products piece is the last stage, which you now implementing the decisions that you made through that particular journey.
Some general questions here for both of you. You can answer. Do you offer Sharia compliant investments, and talk a bit about tax on offshore investments? These are the quick questions from the audience. Ikush can start, and then Aurelio, you can talk.
We don't have in terms of Sharia compliant, but what we do have is funds. We call it the CIO Islamic funds. They're essentially following the Sharia law, and they're basically looking at providing access to investments that give you a lot more focus on the principles of Sharia. So it really is removing you from the conventional, and it's actually performing some of the indexes. We have two funds. One is a CIO Islamic fund that follows the guidelines, and then we have the equity and the income fund as well. So we're happy to share with you. Please do reach out to us at wealth.kenya@se.com just to get in touch, and we can share that information. Alternative, we also have this on our website if you want to learn about it more. In terms of tax, what I will say is we are not tax advisors. So caveat to that, what I would suggest is speak to a tax advisor, but the offshore investments do generate income and they're credited to your account grows. But I would advise you to speak to your tax advisor too to get more clarity.
Yes. I think also from someone who wants a little bit more on Islamic funds, we do have the experience out of our UAE office. We can be able to connect you if you want Sharia compliant bonds or more of the funds that we do offer. We do have that through UAE, so reach to us, we can be able to support. From a tax perspective, as Kusha said, we always advise our clients to speak to our tax attorney who can be able to guide them on what would be their requirement depending on the situation that they are in.
One question for Aurelio and then another one for Kush, and then we'll wind up the conversation. So first with you, Aurelio, I think there's a bit of innovation that goes on, whether it's digital advisory driven or product based, that you're giving out to clients. And maybe you can talk to us about those and how those would enhance client outcomes in the end. And then I have a question for Kush before we close.
If you look at from an investment perspective, obviously technology has really enabled a lot of things. We're having this conversation because of the advancement in technology. And from a wealth management or an investment space, we look at it mainly in two broad areas. One, from a transaction perspective, without the innovation and investment, we wouldn't be talking about Standard Chartered Bank be able to put all the investment product that we have on a mobile phone. You can literally be able to go through the journey, invest in a fund out of US, China, Tokyo, out of the comfort of your home. And that has been powered by technology, made transaction really easier. But there are also the other pieces that we did talk about every single morning. We do share with our clients through a podcast or some write-up that you say that you do receive from us on a daily basis. But it does synthesize market information that happens globally that be able to give you information on what does this mean to you as an investing client in Kenya. That wouldn't have been possible to really process all that large data and be able to give you information that is relevant to you. And we're seeing that a lot changing in the wealth management perspective going forward, and a number of players are using it. Obviously, we're using it a lot. But the other piece that we are seeing is that from a client perspective, we're seeing changing client experiences. More and more clients are looking for our focus on personalized advice aligned to their goals. And we're seeing more of this as wealth transfers from baby boomers, Generation X, into the millennials and Gen Zs. They want to invest based on some solutions that are a little bit more personalized. And you can only be able to achieve that through technology. And the more we go, we see that advancing. But also you bring it home. Our central bank did launch a portal that has enabled Kenyans to really invest through the app. One of the things that we've done from a StanChart perspective is leverage on that to be able to provide clients with the liquidity if they need it, and also opportunity to use that to reinvest. That has been made possible through technology. So we are seeing more and more of this changing and going forward. Also, Kush did speak about the CIO funds. That really speaks to the changes in the market and brings that in the solutions that provide your best product. We've been able to achieve that through technology. So we should be able to see this changing going forward, how we interact with the investment products, but also more personalized investment decision coming up, supported by innovation that is taking place in the wealth management space.
Thank you, Aurelio. Kush, now, where should someone, given all that we've spoken about so far today, where should someone get started and where can they find you?
So first step is there's 3 ways to engage. First is we have our branch across Nairobi or in some of the up countries as well. You can walk into any of our branches and have a conversation with the team that's there to start on the goal setting. The second one is wealth.kenya@sc.com, where you can just send an email to understand, I'd like to have a conversation so we can kick it off. And then the third one is, as already mentioned, tech is in our DNA. So if you want to access global investments, local investments, first of all, you can just go online and open an account straight away. And I think there's a question on that, and be able to buy, if you want government securities, you can buy it on the mobile phone. If you want to access US tech, we have it on the phone as well. So if you're a self-starter, you just want to set it up, you can do it on your own, but we're happy to speak to you through our relationship managers, and you can connect us with wealth.kenya@sc.com or walk into any of the branches.
Any closing thoughts now, Aurel and Kush? Maybe you can start with Kush and then finish with Aurel.
I think just really, we talk about inspiring our clients to really take timely action. I think that's what we want to really be there for. Take that timely action to work on your wealth planning and use practical insights, right? The world has a lot of information. Sometimes it's wish-wash. Sometimes it's just there to entice us. But let's help you know the facts, know the research, use that to really bounce off ideas and make investing and protecting and long-term planning as part of your goal that you want to build towards, so that you're at that point when you say, listen, I've done everything now. I really want to enjoy what I've earned. That time has come for you so that you can make the most of it and spend it with your family and loved ones.
Aurel?
Yes, for me, just financial planning and investment decision is long term. To start your journey, do have a conversation with a professional, or we already be your sounding board to help you start the process and be able to help you through your journey. So talk to us at wealth.kenya@ac.com. We'll be happy to reach out to you. I'll sit down over coffee and do have a conversation on how we can be able to support you meet your life goals. Thank you.
Thank you so much for joining us today. I hope we can have more conversations like this next year, and then we can be able to tackle a bit more questions and just helping people grow your wealth. So it's very important to think about long-term investing, and that's what we advocate for at Wango Capital. A Merry Christmas and Happy New Year. So see you again in the new year.